Good afternoon, and thank you for joining us today. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities, Inc. Today's webinar focuses on Paramount Gold Nevada Corp., which is focused on its feasibility stage Grassy Mountain Gold Project in Oregon. The company also owns the former high-grade open-pit Sleeper Gold Project in Nevada that features a PEA, and it also has the option to acquire the early-stage Frost Project, which is strategically located only 12 miles from its Grassy Mountain project. Today I have with me on the webinar, Rachel Goldman, CEO and Director at Paramount Gold. The format of today's webinar will be comprised of two parts. To start off, Rachel will provide an introduction to Paramount Gold, including an overview of its operations, the permitting process underway at Grassy Mountain, and what investors have to look forward to in the coming months. In the second part, we'll take your questions live. So please send your questions via the chat and we'll get to as many as we can. And I'll note you can type them in at any point throughout the webinar. To start, we'll handle the disclosures and then get into the presentation. So for Paramount Gold, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Paramount Gold corporate presentation located on the company's website. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular needs or situation of individual investors. Participants should rely on their own investigations and seek their own professional advice before investing. Please see our most recent research located on our website for Paramount Gold specific disclosures. And with that, I'll now turn it over to Rachel to update you on Paramount Gold and what investors have to look forward to with the story.
Thank you, Taylor, for that nice introduction, and thank you to the entire Red Cloud team for organizing this opportunity for us to speak with your investors. So maybe to start, because I know Paramount Gold Nevada sometimes flies a little bit under the radar screen for a lot of investors. We are a U.S. domiciled company with assets based in the U.S. We are listed on the NYSE American Stock Exchange under the symbol PZG. The company was originally formed in 2015. The predecessor company was called Paramount Gold and Silver. At that time in 2015, it was acquired by Core Mining. And the spin-out company, Paramount Gold Nevada, was named such because we were spun out with the Sleeper property that you mentioned in Nevada. The following year in 2016, we acquired the Grassy Mountain project in Oregon, which since that point has really been the primary focus for the company, advancing it through various stages of study, culminating in a feasibility study this past fall, and through the initiation of the permitting process, which is significant because this will be the first gold mine ever permitted in the state of Oregon. So as we sit today, the company has a market cap of about $37 million US dollars. We have in excess of 4 million ounces of total gold resources between the two assets in Oregon and Nevada. Cash as of our December 31st quarter was $3.5 million, and we have a good shareholder base with about 30% ownership here. I like to point out Seabridge Gold, who has been a very supportive shareholder nurturing the company through its inception and is well represented on our board. We share Rudy Franck as our chairman, is also the CEO and chairman of Seabridge. And I would point out Ausenco as well, who came about their ownership position as they were lead on the feasibility study that was recently completed on Grassy and elected to take stock instead of cash for the work that they did for us there. So as mentioned, Grassy is located in Oregon, but importantly, it is in Eastern Oregon. And this image here shows pretty clearly that Eastern Oregon looks nothing like the coastal west of the state. This is important on a number of fronts. Certainly, it's a much more palatable place to build a mine in terms of community and county level support. And in fact, the eastern part of the state suffers from significantly higher levels of unemployment and of poverty. The project, Grassy Mountain, which has traded hands a number of times over the decades, has been well known. There is a lot of local level support to see this project move forward. We will be creating about 300 jobs while in construction and then 100 full-time jobs once we're into production. So where we're located is actually right on the border with Idaho. We're about 70 miles west of Boise, so Boise would be the closest airport to fly into, and then it's about an hour and a half drive to the Grassy Mountain site. So as mentioned, the feasibility study, which we just released in September of this past year, the highlights are shown here. So this is a very small but high-grade, quick payback underground mine. So 390,000 ounces of proven probable reserves is what we'll be producing here at 6.5 grams a ton. It'll be a small 750 ton a day milling operation, simple CIL recovery process, producing on average about 50,000 gold equivalent ounces annually for an initial capex of sub 100 million, an initial mine life of 8 years. And as of today, as I mentioned, our market cap is hovering around 37 million. We will be generating average annual free cash flow of about 35 million on a post-tax basis once in full production. The study metrics are shown here. We ran at a base case 1470 gold price, yielding very impressive sub 700 all-in sustaining costs. After tax internal rate of return of 26% and an NPV of just over 100 million for about a 3-year payback. On the downside, we have break even of about $1,000, which gives us good buffer in case we have variability in the gold price between now and when we need to make a construction decision. And certainly on an upside, at the time that we had released these study details, the gold price was around 1900, but certainly that sees a significantly higher return and a quicker payback. So as mentioned, we are building this small underground mine that's included here in the red circle. But what you can see from this resource and reserve table is that we have significantly more ounces here in the total M&I of north of 1 million, but at lower grade, just over a gram per ton. So what this starts to paint the picture of is why previous owners of this project envisioned it more likely as an open pit. And certainly, as this next slide will show you, it would be a very amenable open pit situation, as the lower grade material here occurs about 50 meters from surface, and even the higher grade is only about 150 meters from surface. That's part of the reason the development costs are as low as they are. But I think this management team, this current Paramount, was the first owner of the Grassy Mountain project that had a better understanding of the political and social concerns in the state, in a state that's never permitted a mine before, such that they recognized it was going to be far easier to permit a small underground mine with a small footprint than an open pit. However, we certainly would hope that down the road, once the underground mine is successfully in operation, that there would be a willingness to see us expand through an open pit expansion. That would certainly help us to extend the mine life beyond the 8 years. Other potential for mine life extension would occur here if we can find more higher grade at depth, which hasn't been fully drilled off. The deposit has been well drilled by ourselves and the previous owners, but there is still some potential to put in some holes once we've already gone underground through our development work for building the mine. It'll be more economic to drill from there, and there is potential to see additional high grade get introduced into the mine plan. Beyond that, there are some near mine targets that we have, and as Taylor had mentioned at the outset, we also have the option for the high grade Frost project, which we'll be drilling this spring, which is a priority target for us. So as this is going to be Oregon's first gold mine, it is important to touch on permitting and where we are in the process. This is a nice aerial shot that just shows that there isn't a whole lot around us right now, which certainly makes it easier to move through certain aspects of permitting. We have received our conditional use permit from the county, and we are engaged in ongoing discussions with the state and the Bureau of Land Management at the federal level for our next stages. So what's important to note about permitting in Oregon is although they've never permitted a mine before, it's not because they've ever rejected one. It's simply because there hasn't been the right combination of a project that's advanced enough, and I think the right thinking of the management team to envision the proper way to get it through the permitting process and into development. So these laws have been in place since the early 90s. It's a time-based approach, which means that the agencies, the state agencies, have specific amounts of time for which they have to respond to different phases of our submission. So where we are in this process is we made our initial consolidated permit application submission in November of 2019. At that time, we knew that there were going to be some elements that weren't fully complete, but it was an important process to understand how the process works out, whether the regulators respond in their prescribed period of time. The good news is that they do. In this summer, I would say June or July. It is important to note, too, that Oregon is a pay-to-play state, meaning that we reimburse the agencies for the work that they incur in assessing our permits, which is why we do ensure that we maintain a sufficient balance sheet to be able to just going forward. So with the advent of our next submission, our expectation is that we will come through the initial 90-day review period and then move directly into the 225-day review period to draft permits. So based on that timeline, we would expect to receive those draft permits in 2022, which should allow us then to be finalizing construction financing, make a construction decision, and be in production in 2023. The green dots that I point to back here really just signify the other milestones that we've accomplished within the state. So even though the market harbors a significant amount of skepticism about permitting in Oregon, we've had a number of good permitting milestones to date, and as I mentioned, continue to work very collaboratively with the regulators there. So with respect to further exploration, potential mine life extension at Grassy, as I mentioned, Frost is the project that we're most excited about. We've optioned this project from Ely Gold. It's about 12 miles from Grassy Mountain, so it's certainly within trucking distance. This is a project that was owned and drilled in the 1980s by Western Mining. At the time, they had hit intercepts up to 20 grams per ton gold. And so certainly this would be a very exciting add-on to the Grassy Mountain project, particularly as if we could find material anywhere in and around that range, we would be trucking it to the Grassy site, and it would certainly go a long way to help the mine life extension and even the payback period. Our team has had an opportunity to shoot geophysical surveys over Frost, and it does show some similar signatures as what we see already at Grassy. So at some point this late spring, I would say we will be in a position fully permitted with a rig to be able to put in an initial program of probably 14 to 15 RC holes that will have two main purposes. One will be to drill holes to try and offset or confirm those historic intercepts I'd mentioned from back in the 80s. And others will be to test these alterations in structures that the geologists have mapped out. So moving on to Nevada, as mentioned, Sleeper Gold is what led to the Paramount Gold Nevada name. This was a very storied mine back in its day where it produced close to 2 million ounces from one very high grade sleeper vein at 7 grams per ton through an open pit heap leach. So what we have left today is a lot of ounces, but at materially lower grade at an average of 0.33. But I would say this 3 million ounces in Nevada is simply a starting point from what we expect to be a much more significant project for us to work on moving forward. So again, for a bit of history here, there was a PEA that was originally done on Sleeper by Paramount in December of 2015. So at that time, the gold price was about $12.50, and the PEA study suggested a heap leach operation of 30,000 tons per day, producing on average about 100,000 ounces of gold for 175 million capex and a 9-year mine life. It's important to point out here that this PEA was done assuming only processing the oxide and mixed ore. So it completely excluded the 60% of the resource, which is sulfide. So for what we have decided to do, is something that we've announced in December, a plan that will essentially work to build on these initial building blocks that we have at Sleeper, which we outline here in the economics from that PEA, and working on the different component parts to build on what a reasonable restart scenario could look like in the new current environment. So just running those PEA inputs at anything closer to today's commodity prices, you can see that even at a $1,500 or $1,700 gold price, the after-tax rate of return is impressive, as is the NPV that I have here on a 10% basis, and a pretty quick payback. So certainly something that's worth exploring further than what we have in hand right now. So the optimization plan that we'd outlined in December had a number of goals set out, which could take us, certainly if we're working on this on our own, we could spend a few years working on optimization here. But the nice thing about Nevada is it's a much more streamlined permitting environment. So certainly if we were ever at a point where we decided that we had enough to go on right away, it could be about 3 years to move through permitting and into production. So the goal of the optimization plan, I'd say, is 3 main points. Number one is because those sulfides were excluded from the original PEA, there are certainly opportunities in hand to look at oxidizing of the sulfide material. There was already some studies done on biooxidization, and this should be compared to alkaline oxidization to see what would be the appropriate processing and throughput strategy in a go-forward basis. The second thing, which is very important, is if I can draw your attention to the little red stars in the top red box here. Inside those red stars is where the original Sleeper pit was, and that's where the current 3 million ounces all sits. So what you will note are 2 things. Number one is we have a substantial land package here. This is 38,000 acres, largely contiguous, and also virtually unexplored. Certainly none of it has had any modern exploration done on it whatsoever. So the purpose of the analysis that's going on now will be, number one, to look at our current resource where there are already pockets of higher grade than the average to determine where we should be allocating some drilling dollars to try and find more higher grade material to introduce into a future mine plan. And certainly, though, what could also be exciting will be to allocate some capital to drilling outside of where the original resource was, to potentially find another Sleeper vein, and if we're not so lucky to find something that's 7 grams per ton, but at least to identify additional satellite deposits that could be also introduced into a future mine plan. As we do so, we'll also be in a position to be putting together the data that will be needed for baseline studies for an eventual permitting and restart scenario. So to touch on metallurgy as an example, the company had previously run some bio-ox studies on the sulfide material, and it did lead to recoveries that weren't substantially lower than what had already been included in the PEA, which you can see on the left here. So this is what needs to be followed up on, and as I mentioned, compared to other oxidization processes to identify what and how could be done to include these sulfides into a mine plan moving forward. In addition, in the pursuit of higher grade to raise that average from 0.33, I would point out, for example, one portion of the deposit called Westwood, where we have already grades, oxide grades over 3 grams per ton, and sulfide grades in excess of 10 grams a ton. So certainly finding more of this type of material will also help to round out the picture at Sleeper on a go-forward basis. So with respect to the team, I joined the company a year ago in February, but the rest of the management team has been in place since the first Paramount, and so has some very good continuity and knowledge within all aspects of the business. On our board of directors, as I mentioned, we have very strong support from the Seabridge team, as well as some strong support in the geologist camp as well. So Paramount today, with a market cap of around $37 million US, we have endeavored to keep our share count low. So on a fully diluted basis, we have about 43 million shares outstanding today. We have seen a nice uptick in our average daily trading volume. It's up on average about just under tenfold over last year. And we believe the stock is cheap. We're in a little bit of a weaker time for the gold complex overall, but we very rarely even see opportunities where we could acquire ounces in the ground for less than $9, but that's where we're trading at today. So we do think that there are multiple avenues for us to be able to continue to advance our projects, de-risk our assets, and then see a commensurate increase in the valuation on a per ounce basis. So what you can look for us in the coming months will be the initiation of the drill program at Frost, which should be late spring this year. The next permitting submission for Grassy, as I mentioned, will be this summer. The initiation of the Sleeper drill program will also be in the summer, and we're hoping to get some metallurgical details out on Sleeper probably late spring as well. So we can see that it will start to be quite busy for us on activities outside of just permitting in Oregon. So that is pretty much it from my end. I will pass it back over to Taylor in case we have any Q&A that we want to go through.
Great, thanks, Rachel. So yeah, now we'll turn to the Q&A portion of the webinar. We have had a number of questions already come in, but a reminder to everybody on the line that you can type in your questions at any point right now. So I'll kick it off. So first off, just wondering on Sleeper, just kind of wondering about the strategy there. Have you evaluated potentially selling it or finding a joint venture partner to continue developing that project?
Yeah, it's a great question. I would say selling it outright probably isn't an option at this juncture, partially because shareholders that have owned Paramount for the last number of years have essentially been carrying this project, and because it's been really sleeping in the portfolio, it hasn't really yielded anything to them yet, and that's part of the reason why we're very keen to see an opportunity for value creation at Sleeper, but certainly a joint venture at the right time in the right circumstances would be something that we would consider. Even just taking the basics from the PEA, a 200 million capex when we already have 100 million capex at Grassy for a company our size is obviously not feasible, but we can do a lot of work before any construction decision would have to be made, even just to see how we can optimize and improve upon what we already know about Sleeper.
Okay, and just to follow up on that, how long is the development or construction process for that's kind of outlined in the PEA?
How long would it take to construct?
Yeah. Mm-hmm.
Well, the PEA is pretty dated, so I'm not sure that it would be totally relevant. But if we were, like I said, if we were to start today to move through permitting and construction, it would take 3 years in total. Okay.
So turning to Grassy now, just kind of, again, another question, wondering about kind of the overall intention there. And it's, I'll just kind of read the question. Is it your intention to build the mine, and when/how could you finance it without dilution? Or I think that's the question. It's a little bit hard to read, but yeah, maybe you could just speak to that.
Sure. Well, first of all, I think that because of the permitting uncertainty in Oregon, the current valuation of Paramount, gold downdraft notwithstanding, does not reflect full value for either asset. So I am firmly of the belief that as we progress through permitting, And when we can come out and say we've received our permits, whether it's the draft of final permits, I think there'll be a significant re-rating potential for Paramount. And I think it will be a re-rating not just for Paramount, but for the state of Oregon in terms of them being open for business as well. And I think it'll be a different discussion at that juncture when we're in that position. And so, but even if we had to be in a situation where we were discussing financing at this juncture, I mean, certainly on a 60-40 typical debt equity scenario, of course there would be dilution, but we would also be diluting it so that we could build a mine that would generate $35 million of after-tax free cash flow annually. So I think the trade-off is there for Grassy, even on a Paramount standalone basis.
Mm-hmm. Right. Another question, just wondering about the economics at Grassy. The IRR and 5% NPV, is that after tax?
Yes, that's all after tax. And so if you recall at the 1900 scenario, and we have sensitivities that would be included both certainly in the feasibility study and likely in the press release from the feasibility study, which we found on our website, that would have prices other than 1900 as well. But everything was represented on an after-tax basis.
Okay. Again, with Grassy, wondering about the deposit. Has it been pretty much drilled off? How deep is the deepest hole, and is there potential for downfill to the zones?
It's been reasonably well drilled off. There's about 470 holes in total that have been drilled at Grassy. So certainly it was at depth it was drilled enough to be able to identify an economic resource on which to do the PFS and then the feasibility study and ultimately to make a construction decision when we get through permitting. But we do think that there could be other pockets of higher grade at depth, but again, would be more economic to drill once we're underground, sinking a decline in a development scenario. It'll be more economic to do it from there. So the current deposit, we start 150 meters from surface for the higher grade. We're going to be mining down to about 315 meters below, and so that that's pretty much as far as it's been gone.
Okay. I guess moving on to Frost, another question. Just right now, that has not been drilled yet. Is that correct?
It not by us. So the only time it was drilled was in the 80s.
Okay. And again, do you know kind of how deep it goes down, or is it open at depth?
Oh, well, right now, we would love to even be able to pinpoint exactly where those holes were. If we could just go in and twin those 20 gram per ton holes, we would like nothing better. But sadly, we don't have exactly where they are. So some of this is going to be a bit of an exercise, and we can identify it probably within 50 meters. And previous holes wouldn't have been very deep, and they also would have been vertical. So there is an opportunity for us to come in, at angles and such, and try and intersect that way as well.
Okay. And do you have? I guess it's pretty early days, but do you have any idea of how much this could contribute to the mine at Grassy?
I'd really be guessing. I mean, I would hazard. I couldn't guess at this juncture just because there's so much unknown. But that's the part that encourages us, is that if we find anything that's worth mining at all, because we could truck it economically, we wouldn't need the same, certainly we wouldn't need the same amount of mineralized material. We could even just truck over what we find. Permitting would also be easier for something where we're not building, a plant nearby. So no, it would be really hard for me to guess at this juncture.
Okay. So just again, kind of on the permitting front at Grassy, what else remains kind of outstanding before that revised consolidated permit application is later this summer?
So we have 2 additional baseline data reports, which will be submitted and approved prior to that, to the CPA submission. And other than that, I mean, we are in kind of ongoing discussions on some of and responding to the questions or comments that we'd gotten back from the initial submission. But you know, it's really accelerated and seems to be going pretty smoothly. So at this juncture, we don't see anything that should prevent us from making that submission this summer. And at the time that we make that submission, it'll also be a less a less all-encompassing document, if you will, than the original submission that was made. Was a 10,000-page document. People were starting from scratch to review. They had, 3 months, and it's a lot of material to go through in a short period of time. So this time around, there will have been the opportunity to go through a lot of the questions already. So we don't expect that it will take certainly as much time on the part of the regulators to be able to assess the new information that's introduced to them.
Mm-hmm. Okay. And another question on permitting. I know you did talk about it in the presentation, but maybe just, I think it does bear repeating for this story. It's just kind of, is Oregon a difficult state to permit a gold mine? Maybe you can just kind of give the overall high level answer on that and
I'd say high level. What's the challenge is because we're the first, because, anytime you're the first in any jurisdiction, it's always going to take you a bit longer and cost a bit more. But there's also an opportunity there to sort of ingratiate yourself into the fabric of sort of the new mining community, if you will, and how things are looked at. And so it's really been a good process. What I find is interesting too is because they have specific amounts of time to respond at different phases. That's pretty unique. A lot of jurisdictions, you make your submission and you don't hear back. It's a black box. You don't know when you're going to hear back. There's no onus on regulators occasionally to respond in a certain period of time. So I'd say there are pros and cons. I would also say that whoever comes next after Paramount, whether it's us on a new project or whether it's somebody else, will certainly have a smoother ride. But this was an opportunity at the time for the company to pick up an asset at a very low valuation, understanding that it was a new jurisdiction, but that's sort of the cost you pay to get something inexpensive, is that it takes you perhaps a little bit longer to realize that value.
Great. Okay. Here, I think this is an easy question. Any plans to list in Canada?
Short answer is no. We have found, up until this point, as a U.S. only listed company, we have found that pretty much any Canadian investor is familiar with buying U.S. listed stocks, gold stocks or otherwise. And the same would be said whether it's retail investors, institutional investors. Everybody's familiar with investing in the U.S., where the flip side is if we only had a Canadian listing, it would be a bit more challenging because there are a lot of U.S. retail investors who aren't necessarily able to or familiar with transacting on the Canadian exchange. So right now, I don't see the point of taking on the additional costs of listing in Canada. I think if we were a bigger company and there was potential for index inclusion, then there could be a case to be made for it. To get into the weeds a wee bit on that, we are a reporting issuer in 3 provinces of Canada because of our substantial Canadian shareholder base, which means that we do generally file all the required documents or file prospectuses in Canada for financings and things like that. So we feel that we're sort of doing that work already without necessarily incurring the costs of a full Canadian listing.
Okay. And different question. Are you looking to acquire any other projects, or is it really just a focus on kind of development right now?
I would say we certainly have a lot that we can do with the assets we have in hand right now for the size of the team, both the size of the management team, the size of the capital base. That being said, we certainly keep an eye out in case there's something really unique that we could bring into the fold, but we're not actively or aggressively looking to add, just because, like I said, we have a lot to do over the next couple of years, even without looking at adding in another key asset.
Right. And any jurisdictions that you keep your eye on in particular? Or?
Well, certainly Nevada is, because we have our head office is in Winnemucca, so there's always advantages to adding in more in the same geography. I wouldn't, I think it is a bit unique that we're U.S. only. I mean, there are more U.S. focused mining companies starting up, but I think that's a nice position to build on, and operating in the jurisdictions where you're already known. And certainly, I mean, we have frost in Oregon, so I wouldn't say we would never do anything else in Oregon, but I do feel that until we've received permits in Oregon, the market would question why we would be doubling down in a state that hasn't yet permitted us. I think those would be, probably the two that we would focus on to start with, unless, again, it was something really unique that came our way and that was right-sized for our company.
Okay, sounds good. So it looks like we are kind of getting out of questions here. Maybe you could just kind of sum up the key catalysts again for investors before we sign off.
Yeah, sure. So we'll have a busy summer. There's no doubt about that. We are waiting for sort of our final administrative sign off, I would say, for the frost property. And once we have the right weather conditions, we will have to build some access there. We will update the market about our plans for frost before we go ahead on that. So we will get into a bit more granularity about what the plans are going to be. But so we should be able to drill there, I would say, likely in the late spring. So probably the June time frame. In and around that same time, we'll also be making our next CPA submission in Oregon. And if the regulators stick to their prescribed times, and there's nothing that says they have to, they could come in a bit shorter, but let's assume it would be that time frame, then we would hear in the fall whether the application was accepted as complete or whether there was anything missing. And really our hope is this time round it will get accepted as complete right off and then move us into that next 225-day review period, in which case it'll then become kind of quiet for us on the permitting front in Oregon. It will be more of a waiting game, and which is why it's been good timing for us to now be shifting some attention to Sleeper. Certainly, a great big starting point with 3 million ounces in the world's top mining jurisdiction, and a lot of potential from that unexplored acreage that we have. So just starting to scratch the surface of what could end up being multiple years of potential development and discovery work there, and but also something that could be accelerated with success and with whether it's Paramount allocating greater capital there or potential for bringing in a partner at some juncture.
Perfect. So with that, I'd like to thank Rachel from Paramount Goldman for taking the time to host this webinar today with Red Cloud Securities, and thank you to everybody on the line for tuning in with us.
Thank you, Taylor.